Good morning, this is Sam Gurung from Beta2 Limited coming to you with this morning's market report. Date today is the 9th of July 2015. As it's been the theme of last couple of weeks discussion, Greece is the main sort of agenda I'll be talking about today. So the current update on Greece is that Greece has until midnight tonight to hand in a proposal in exchange for a European Union bailout. That proposal will then be considered by 28 leaders of the European Union on Sunday, where they'll basically decide whether to accept it or not, which also dictate whether Greece will stay in the Eurozone or not. So it seems like, as obviously my yesterday's sort of report, Sunday is still the deadline. Now, what Greece has also done, certainly Tsipras, the Prime Minister of Greece, is extended the capital control until Monday. Originally it was actually until Friday, so this is basically, depending on the results coming out on Sunday, what we don't want is volatility and uncertainty in the marketplace in Greece on Monday. Therefore the capital controls has been extended. Now, in regards to the market, the reaction is still fairly muted. Markets still expect the Greek debt situation to be contained. So on back of that, equities are up slightly. We also saw a rebound in Chinese stocks. So on back of that, overall equities around the sentiment certainly positive. In the FX arena, euro is still under pressure at the moment. The view is slightly more neutral. However, we are seeing currencies like Australian dollar, Canadian dollar slightly up. This is on back of equities going up, pushing up high yielding currencies, and yen being the weakest currency out there, losing its safe haven status. So until Sunday, markets still expected to be a bit nervous, depending on what sort of results come out. Moving on to other sort of topic of discussion, we had the minutes of the meeting coming out in Federal Reserve yesterday evening. The actual minutes come out fairly balanced. On one hand, we had sort of the members of Fed seeing the economy or the recovery in the US economy picking up, therefore expectation of interest rate hike going up. But at the same time, they also raised concerns in regards to China, Greece and weak consumer spending, thus balancing the bullish stance with the dovish one. So therefore, in regards to interest rate increase in the US, no change. Markets are still expecting a lift off around September. We have a policy meeting in the US end of this month where no change expected. After that, September 16th, 17th will be the next meeting where the lift off is expected. How much? We're not quite sure yet. We may be looking at around 0.25%, but that's the general consensus at the moment. I think what we may see after the Greece situation dies down, or certainly after the results of Sunday, market focusing or shifting its focus to the interest rate increase. Aside from that, looking at sort of fundamentals and the shift in fundamentals, what we're seeing at the moment is basically market factoring in an interest rate cut in Australia and Canada. So while we've got economies like US where interest rate is expected to increase this year twice, and we also got UK economy potential interest rate increase early to mid next year, we've got Australia and Canada looking at potential interest rate cut. The reason being is basically commodities price plunging and slowdown in China. If you look at Canada, which basically one of the largest exporters of oil outside sort of Middle East countries, oil accounts for 25% of Canada's export. Oil prices have been obviously going down dramatically. In regards to Australia, you've got iron ore prices plunging, currently in the bear market at the moment. Australia, one of the largest exporters of iron ore. So back with that, these two commodity currencies are struggling, they are seeing slowdown, and what we may see is central bank cutting interest rate in order to boost the economy. So purely based on fundamentals, not technicals, we may see weaker Australian dollar, Canadian dollar, sort of second half of this year. That's pretty much it in regards to the market. I will come back to you again tomorrow with further update and news. Thank you very much.